Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 9th. My name is Eric Wilkinson and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with our economic data. And nothing really across the pond, but here in the United States, we got the NFIB, which is the National Federation of Independent Businesses. It's a small business index on their feeling of the overall economy, and it is at 107.9, expected to be 108.9, so slightly lower than expected. But keep in mind, these are in the hundreds. We've been seeing this for about 2 years now, since 2016-ish. So that's good. The small business is relatively confident, and maybe not as confident as they had expected. One thing we did see with new homes or housing starts came in at 189,000 units started, expected to be 203,000 units started, lower than expected there. Seems like they're pulling back a little bit. We talked about this a lot lately, where the economy is doing well, but we're just not seeing that robustness we were seeing last year, for that matter. It's tapered off a little bit. It's still strong, don't get me wrong, but it's not as strong as it was. So the economy's not overheating. Therefore, that's part of my mandate of thinking that the Fed doesn't necessarily need to increase interest rates as much. All right. Anyway, on to the overall market. We do have a Fed governor a couple Fed governors speaking, but let's not even talk about that necessarily. All right, so moving higher in crude oil by about 60 cents right now, trying to test that 75 handle, back above the 78 Fibonacci. Now, yesterday's market action really made it look like we were building a bit of a bottom here, at least for the short term. I'm under the mentality that I think it needs to roll back over, but we're not seeing the market act that way right now, and we're above that 78 Fibonacci, which will act as support now. So a settlement above there is going to look more bullish than I really like to see. I don't have really a position in crude oil, but I'm waiting for that market to start coming over before I start getting short in crude oil. Gold futures, after yesterday's big sell-off, still above this 23 Fibonacci level, which is the 3-year off the 3-year Fibonacci. It's acting as support. The closer we get to there, you can see we're kind of holding up and away from that. That being said, we're still stuck in a range here with gold. I was expecting it to try and stay above 1,200 a little bit longer, but we're seeing that come off. All right, Bitcoin, point of control, down 50 some odd dollars, whatever. It's not going anywhere anytime soon unless there's something major, a big catalyst to really get interest back into that market. It just seems to be dying on the vine. Bonds moving higher today by about half of a point. This is that thing I thought it was a little bit overdone to the downside. I did some TLT sold some TLT, looking for some upside move. That's helping out today. It's not obviously 50% of my max profit yet, but it is moving in my direction. As a matter of fact, it's only 10 cents better today. I sold it at 40 some cents yesterday. It's trading 33-ish now. So looking for this move to come up and maybe even test the value area low there. But I am looking for a counter move here. VIX coming off, but still in the teens. That's good. That's pretty much because the market's really, yesterday, we talked about this. Low volume, we sold off. Late in the day with those light volumes, because it was a holiday, I said we could probably easily see a melt back up. That's what we saw across the board in equities, making it look like a very good bottom. Not getting the confirmation I would like to see today. It's pretty wishy-washy at best. As you can see here, we did go up and trade above that candle, which would assume that we are, or one would assume that that is confirmation. We haven't really settled up there, which is a more solid confirmation. to me, it's just it's hard to read the tea leaves right now, which is why I haven't added a whole lot of directionality to the overall equity markets. And with the NASDAQ moving higher today by about 35 points, it tested the 61.8 Fibonacci extension and failed, just like it did yesterday. These are some of the things I was talking about where we're not seeing that really good confirmation as of yet. A settlement above that 61 Fibonacci and above yesterday's high would be a great confirmation on an upside. Not seeing that yet right now. E-mini S&P, similar situation. We traded above yesterday's high. That would indicate that we got a bit of a confirmation, but the way that the market's really reacting, not really being showing conviction anyway to this move to the upside, at least not yet this morning. That's making me a little bit nervous and wanting to stay on the sidelines. You can see this is where we were talking about confirmation of yesterday's high, but it was brief, and now we're starting to come back off. Basically, after flushing out shorts of the overnight inventory, you can see overnight inventory got short. We flushed them out, printed those highs to make it a solid number. Now we're starting to see a little bit, we're not seeing as much conviction to the upside. All right, with that being said, looking at a couple of things that I've done today, Caterpillar being one of those, getting out of a trade here. If you guys remember back last month, I got into this trade. We had low implied volatility. I was looking for this market to pull back with the increased interest rates. Less people might be buying these type of products. The businesses are going to look at the higher cost because of the interest and maybe not buy as many new products going forward. That being said, I was looking for a bit of a pullback in both Caterpillar and Deere. Low volatility, expect that to go up, right? Well, that's what I did. I went in and did the November and bought the 155 puts in there for $6.15 for Caterpillar. With this market move, volatility expansion going into that earnings, you can see we got the volatility expansion. Didn't necessarily right off the bat, we got into this trade here. We got a counter move here, but the volatility offset that. As you can see, the market was going opposite of my direction, but volatility was increasing. That was helping me stay in this trade longer, which is how we set this up in the beginning to be mechanical, right? We set ourselves up for success by getting into these opportunities, the correct environment. All right, so we, in a sense, bought volatility. We got that volatility expansion. Now I got the market move. The volatility expansion allowed me to stay in this trade longer, got the move with increased volatility as well, allowing me to get out rather quickly in Caterpillar. So those November 155 puts that I bought for $6.15, I tried to get out for a 100 or a 50% increase in that value. So basically to $9.15 ish. That being said, I tried to start out at $9.15. I got out at $9.05, $9.05 for that trade. On the Deere trade, though, hasn't quite gotten to the point where I need to get out of these. The Deere trade, I got in and bought these puts at around the Deere puts I bought at $5.65, so double that. I'd need to be somewhere around $7 or $8, so not quite there. I'm working an $8.40 offer right now. It's couple of dollars away, so it's not even really close. With those Caterpillar, like I said, when it comes down and kisses the strike that I'm at, I should be able to achieve my profit potential. That worked out in Caterpillar. In Deere, I'm on the 150 puts. As you can see, we are a couple of dollars away from that yet, and hopefully if we get those couple of dollar moves, I'll be able to be a lot closer to my max profit potential for Deere. And that's about it for today. That's all I've really done. I haven't added anything, just keeping a close eye on a couple of these other ones that I just talked about. Thursday's webinar is going to be a really good one. We're going to be talking about how you take advantage of this volatility, just like I did in this Caterpillar trade where I got the directional move wrong, but because I set myself up for success when setting up this strategy, it allowed me to stay in there a little bit longer in order to be right. So check it out. These are really important rules that you guys all need to know. All right, so go to Pro Trader Strategies and check that out. Other than that, if you can't take that, take it easy.